Bank of Canada has adjusted the benchmark interest rate down by 0.25%, the first time since March 2020. And truthfully, there are so many of you that have been waiting for this announcement to give you a green flag to go ahead and do something in our market. Well, how is that going to affect our market? What is happening in our market right now over the last month? And have all the homes been selling for crazy prices like they have been? Well, we've got all of this and so much more, but let's dive into the interest rates right now. So many of you responded this way when you heard the news this morning, and I can't blame you. This has been basically a green flag that has been flown high above the Canadian economy this morning, saying that everything is going to be good. We're moving in the right direction. Things are better or going to be better. That's kind of the in between the lines type of feeling that many of you see when you are hearing this announcement this morning. But is that actually what's happening? Is this going to impact our market? Well, we are the first G7 country to launch into the easing cycle as expected, and so many headlines leading up to today's announcement have said that this is going to happen. We could expect this being the first of multiple drops over the remainder of 2024. Now, our economy has evolved over the past number of months, and inflation will continue towards that 2% target, said the Bank of Canada this morning. And when asked in the live feed this morning, how is this going to impact housing, Tiff Macklin said, well, we'll see how it goes. And to me, that's kind of like your grandma trying a new recipe and it shows up on the table and it's sitting there and you're going, really? And she's like, well, let me know how it goes.
Shut up, Grandma!
And what's fascinating, in all of the headlines and all of the reports that came out this morning, so many, nearly all of them, said that this will not impact the real estate market immediately. And I think they're wrong. And here's why. Buyers and sellers that our real estate team here in Calgary have been working with to help homes, sell homes, all of that, as well as buyers and sellers across parts of Canada for the number of years have been living with multiple offers, prices rising, concerns of affordability, and so much more. Calgary has seen a massive growth in home values as our population has drastically grown over the past number of years, and it's expected to still grow in the coming years as well. Now, will this change that the Bank of Canada made to the benchmark interest rate make things more affordable? No, I don't think it will. If anything, it could go the opposite way. And that might be a little bit of what he's meant by, we'll see how it goes. What it is doing is giving a green flag to buyers who have been on the sidelines for the past number of years, waiting for interest rates to come down. And what this is signaling to those buyers is very simple. It's saying that this is the worst our economy is going to get, and we are now getting better. Now, the one nod to the buyers, what this does in saying, hey, green flag, let's go, it could bring out buyers and sellers in our market that have been frozen for the past number of years and haven't made decisions or haven't wanted to make decisions. It could bring more competition for homes that are on the market. We could possibly see price increases further because of our low supply and this increasing demand that could be coming to our market. And hopefully, we can see more inventory with more sales, because here locally in Calgary anyways, the demand is still very, very strong. Now, if you have a fixed rate or are planning on going fixed, this actual change does not affect you at all. The reality is your fixed rate that you are using for your interest rate for your mortgage is actually tied to bond rates. So as the bond rate drops down, that is when fixed rates end up adjusting. What this does do is those that have a variable mortgage rate right now, you will start to see easing on your amortization. So for example, some variable mortgages that are out there have gone from the 25-year amortization that it started with, and now the amortization is over 55 years because so much has gone just towards interest and so much less over principal. However, if you've been in a variable long enough, you have had years where there was so much going to principal and very little to interest. So over time, this will kind of balance itself out, hopefully. But at the end of the day, this is going to affect more for those that have current mortgages that are variable rates, and that is going to actually start affecting you as of this week. If you want to read more about what we are saying, what we're talking about, what we're talking to our clients about, to our team, then inside the market report that we have this month, we have a special page that actually dives into it a little bit more deeper. So feel free to jump into the comments, jump into the description, grab the link, and we'll see you in that report. But don't do that yet, because we want to talk about the market in Calgary, and we want to talk about our homes actually selling for crazy numbers like sellers are hoping. So what is happening in our market? Well, let's take a look. So as you can see in the chart here, this is data that we pull from Kreb every single month, compile into our own stats, and we are able to put together some great reports this video for you. So the green line along the top is the benchmark price in Calgary, and the red section on the very bottom is the number of sales, and blue in the middle, the bar lines, is your actual inventory for the market. So what I see is that inventory really jumped when compared to last month. However, it's mainly an increase in the higher priced products across all product types. So that is where it grew. Lower inventory is still very valid and real in the more affordable price ranges for every style of home. So that's where that blue line shooting up is coming from. Now the benchmark price jumped up over $600,000 to $605,000, which was nearly a 1% higher increase than last month and 10% increase than last May 2023. Now, when we look at the months of supply, you got to remember, months of supply is always between 2.5 and 4 months, and that is a balanced market. When we're looking at anything under that bottom purple line, that is considered a seller's market, which we have been in for a long time here in Calgary. The last time was kind of mid-21 when we kind of peaked into balanced a little bit, but stayed in sellers for a lot longer. So what we saw over the last month was our months of supply increase from 0.94 months up to 1.1 in May. And detached homes are sitting at 1.15 months of inventory, semi-detached are at 1.05, townhomes are sitting at 0.79, and apartments are at 1.22. So what I've noticed when I've looked at the data is that there have been a lot of apartment condos come to the market, which is a good thing, but the demand has not kept up with that supply. So that's where you see that number have jumped a little bit, and it's the highest inventory level that we have based on the 4 different product types. And so why townhomes is sitting so low at 0.79 is because that is the affordable property type that people are moving into, because the starter type homes have gone up in value and they are now moving into townhomes more often. And that is a very hot commodity in our city right now. Now, when it comes to new inventory to the market, you can see a real big jump in the data there. The jump went up to 4,333 new listings, only outdone by 2021, which is the yellow line on the top there. So we've seen a really big increase in the new listings, which is fantastic. However, that story that has been told so many times over every single month in these updates is the sales. Sales were nearly 1% below last year's record high, and it's still 34% higher than long-term trends. And when you look at the data here, we are sitting at the very, very, very top, the highest number of sales. Again, only 1% below last year, which is the green line there. And that is crazy, which means there are still so many people looking for properties and buying up properties. But does that mean our inventory has changed? Well, finally, we have more inventory when compared to last year. However, there are a lot of homes on the market that are overpriced. Sellers thinking the market that is hotter than it actually is, and not enough homes in the lower price points of the various styles of homes in Calgary. And so when you look at this chart here, it's just kind of telling the story again of low inventory in our city. And the interest rate change that has happened today, as I'm shooting this on Wednesday, June 5th, and it's noon right now, I don't think it's going to help that number that much unless we have way more inventory coming to our market than sales that are happening, And that's the only way this is going to change. So I want to remind you that we have a great report in the description that you can go and get for free. It has all the information, all of this information, and so much more. Go get it in the description. But I do want to share one more thing with you that is pretty shocking. If you're a buyer in this market and you have been watching prices in different areas and you've noticed a trend that I'm going to share with you, then you might not be as shocked, because not everything is selling. And there are actually homes staying on the market longer than normal, and those prices are getting dropped. So what does this look like? Well, let me show you. On June 3rd, I pulled all of these stats. And at the time, there were 2,691 active listings at 10 a.m. on June 3rd. 10 a.m., Santa's coming. It's like elf. I don't know. We say that in our house a lot. Anyways.
10 a.m. Santa's coming.
Out of those, the 1,378 homes were on longer than 20 days and less than 60 days. So between 20 and 60 days on market. And the average price drop was over $30,000, $32,000 to be exact. So out of the 1,378 properties, 42% of these dropped their price. 52% stayed the same as their original list price. And 6%, well, gosh darn it, they were hopeful and they increased their price. Anyways, when you look at the actual numbers here, detached, semi, townhomes, and apartment, this is the breakout of those properties that dropped their prices in the different property types. And out of those that dropped their prices, 263 of those were detached properties, and so on and so forth. The next category was apartments. That was the next highest. So you got to remember, a lot of these are not just like high-end properties. There's a bunch of them that are under 700 too, but not that many. Mainly it's people who have put their property on the market. I mean, there was one that I saw, and it was down south, and they listed at, I believe it was like 1.9, and they've been on the market for quite a while, and they dropped to 1.1. There was properties that I saw that were sitting at 900,000 when it's totally not worth that, and they dropped down to in like the high sevens. So some of these price drops have been drastic and really huge. Some of them are just kind of 10, 5,000, but majority, the average is $32,000 in price drops. So why is this happening? Sellers over the last number of years have been very comfortable with a market that has been continually increasing. And what has that done to their mindset? Well, it's gonna continue to keep going up constantly. As we walk into this summer, a lot of buyers kind of had a little bit of pause because they were waiting for this rate announcement. That's one part. Other part is prices aren't just going to skyrocket forever. I mean, as long as there's the demand, the supply, the basic things like that, then yes, things will go up. However, they're not going to go up 2, 3, 4% every single month. Last month, it only went up 1%. That's still 1%, and it still went up a lot, but it's not what these sellers are hoping for. And sellers, some of them, have been getting a little bit greedy. And you as buyers that are in this market can see it. You're going, well, why would I even go look at that house? Why would I even show up? Because you are clearly overpriced, and I'm not playing that game. And that's what's happening. So these sellers that have increased or gone higher than what they should have, they're not getting showings. They're kind of sitting. It's a little bit quiet. Those that are trying to make sure they have a sale happen are dropping their prices, which was 40 whatever percent. So there's been a lot of that's been happening. Now, what areas around the city, so what zones have seen the largest price drops? Well, city center. Inner city, city center has seen the highest, almost 200 of those drops happen in the city center. And a lot of that would have been condos because, again, condos aren't just rocketing up in price. They're a little bit more tender. Let's use that word. It's a little bit of a harder market. It always has been in Calgary, and not for a number of years until we see maybe that market really have more solid ground, solid footing in it. But condos have probably had a big part of this drop, which we saw in the last slide. The next one, the next highest zone in the city was actually the northeast. Now, what specific neighborhoods. Can you guess it? Well, you don't have to. Beltline. Beltline is the number one neighborhood for number of price drops. Saddle Ridge is number 2. East Village is number 3. And shockingly, in 4th place is Varsity and Auburn Bay. There have been some greedy sellers sitting on the market with a higher price than what they should have been in Varsity and Auburn Bay. Next, we've got Altadore, and then Evanston, Cranston, and Hillhurst, all bundled in there together. The next grouping is Legacy, Chinatown, and then downtown West End, again, city center zone. And the last grouping is Shawnee Slopes, Arbor Lake, Evergreen, and Martindale. Totally random, different neighborhoods, but that is the list of the top neighborhoods that have seen the most number of price drops with properties that have been on the market longer than the average days of 19, so between 20 and up to 60 days on market. Very fascinating stuff. How is that going to look as we move into the summer? Are we going to see price drops? I don't know. Are we going to see way more buyers coming to the market? Possibly, especially with this interest rate change. Does that mean that that seller who is holding out for their price could get it? I don't know. If they can wait months, then probably. If they have to make a change before the end of the summer, they should probably try to consider figuring out what the real market value is and get to that quickly. And if you're really trying to figure out market value, then you need to download the market guide that we have so that you can understand what's happening in the market. And you should head over to this video here because we have way more stats for you.